Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the S&P 500 and broader markets. So we had a dip today led by the financial sector. Interestingly enough, you would think it would be the tech sector, with Apple lowering its guidance or saying it's going to miss its guidance, down 1.8% today. Yet the tech sector, or QQQ, closed just slightly green, and the financial sector was down 0.9%. So SPY is healthy at this point. We are looking at anything above 331.19 as a daily higher low. We need an hourly trend change back to the bulls to be confident our new daily higher low has been established, and the daily 12-period exponential support coming into play as well. So we'll see, either tomorrow we're going to change this hourly trend and it's going to be back to full control by the bulls, or we fail to change the hourly trend and further daily consolidation is coming. IWM pulled back today. Bulls bought the dip there as well. I would consider anything above 164.40 as a daily higher low. Same thing, have to change the hourly trend. Nice end of the day bounce. But if we do not change the hourly trend, it's not enough of a momentum shift. So QQQ, lower open today, strong close, and actually it is the all-time high close, surprisingly enough. I still consider the most important short-term support 228.38. At this point, it's just sideways consolidation. There's no even real pullback since the end of January. And the all-time high of 234.93 did break. Not much follow through there, but new all-time high for the tech sector. So this does definitely have my attention. XLF lost the daily uptrend. So now the question is, are we going to see further weakness in the financial sector? Notice the volume, little uptick in bear volume. If we do bounce and fail to break the all-time high and see a lower high and lower low and enter a daily downtrend, that will be notable for me for the broader market as a whole. Again, always watching to see, are both sectors, tech and financial, going down at the same time? Today, that was not the case. If I am going to be bearish, that has to be happening. XLF next support after 30.72. I'm looking down at 30.45. And as far as the weekly chart goes, anything above 29.75 would be a weekly higher low. Healthcare sector still pulling back, trying for a daily higher low compared to 102.58. But with this pullback, even if we do hold that support level, the bulls do have to be cautious of a head and shoulders. This is the 4-hour time frame. But if 102.58 holds and we bounce, fail to break the high, and then roll over, we'll have to be cautious. Again, as the number 3 holding in the SPY, we have to be watching, because if that happens, even if the tech sector holds up, if both the financial sector and the healthcare sector lose their daily uptrend, it's going to start dragging on the S&P 500. Biotech bulls, daily higher low established at 95.99, and bulls looking right back to the recent high, 98.03. Keeping control there with a nice strong close. And the semiconductors with a significant gap down open, but bulls bought the dip, at least for now, have to change the hourly trend back to the bulls. Anything above 142.50 is a daily higher low. So overall, a little bit of financial sector weakness. We'll see if that carries over into tomorrow. As long as the tech sector bulls continue to remain strong, the market will hold on just fine. And daily uptrends will continue to be our guide. Volatility index. So the VIX looking for a weekly higher low is definitely a factor for me. I don't use the VIX in my trading often, but I'm a bit more cautious as a bull in the market, knowing that a weekly higher low compared to 1180 is a more likely scenario than dropping down below that level. So I would not be surprised to see a little bit of bounce follow through and a little bit more market pullback to give us that weekly higher low, at least temporarily. So, said it 100 times, I'll say it again. Gold is positioned extremely well, considering the dollar is in beast mode and the market is right under all-time highs. The The dollar has seen a higher low 12 days in a row now. I don't know when the last time that's happened, but it's been a while. Yet gold doesn't care. That's notable. I am very comfortable with my long-term gold position. Only resistance is 16.1150. That's the highest price we've seen in years. And after that resistance level, we're looking at 16.26 and 16.73. We had the 3-day equilibrium is what we were watching. High, low, lower high, higher low, bull break. And the slightest dollar or market weakness, and gold is ready to go to higher highs. Silver, also with the bull move, gaining on gold in terms of its strength the last few days. It's going to be key. XAU, XAG chart to see who's stronger, gold or silver. Silver's been stronger the last few days, all about 87.56. If that level breaks, it'll be a notable longer-term shift of silver gaining strength against gold. If this level holds, we'll have a tightening range to be watching for the next week or so to then see who's going to be stronger short-term, gold or silver. So support test approaching, and gold needs to pick it up as far as its strength compared to silver to hold 87.56. Bull miners trading 5 days sideways within the range of February 7th trading range, breaking that today. The first break was 31.41. The confirmation was 31.79 breaking. Big time follow through. Remember the 3-day chart, which is what we were using for gold. I consider this a double bottom, so we're viewing this as an equilibrium still, where anything under 35.49 is just a lower high. So gold clearly breaking bullish from its tightening pattern, and the miners clearly not yet. So keeping an eye on that resistance, and if we were to flip over to the bear miners and look at dust, we would be watching for the potential play off of 531 support. Oil, nice save by the bulls today. Pulled back on the 4-hour chart. Here comes a resistance test at 52.31. If we reject, I'll be looking for a setup like this, where we have our high, big pullback, lower high, and we'll scout a higher low. But all about 52.31 resistance, short-term first thing. And why this is a good save by the bulls is because we had a daily trend change with no follow-through, and we pulled back a notable amount from that level, and it looked like a weekly bear flag was likely. And now if the bulls can get over the high of 52.32, the odds of a weekly bear flag will drop a bit. So key resistance approaching, may need a 5 or a 4-hour higher low before breaking that level. Natural gas bulls showing up. In extended hours, put out a video over the weekend for members where I talked about finally being bullish, shifting perspective on natural gas for the first time in probably 2 months. But if you're not trading natural gas in futures trading, you're doing yourself a disservice and putting yourself at a disadvantage. Because if you're trading the ETFs, your opportunity window is way smaller, your hands are tied way longer, and you just have way less control. So we did get a little bull break here, getting over the daily exponential resistance for the first time in months. The reason I was bullish is because of how close we were to getting over exponential resistance. We had a nice tightening range, and bulls played some defense on Friday. So nice to see that follow through. Now we zoom out, and we say anything under 225 is a weekly lower high, and we will need a weekly trend change for any long-term bull follow-through. Lots of volatility out there today. Went over the volatility tickers over the weekend. So Tesla had a nice bull break. I entered Tesla pre-market as soon as I saw that headline about an upgrade because of the double top at 820, and I knew once that upgrade came out, the odds of breaking that double top increased significantly. So I got in at 812, and I exited before the market even opened. I exited half at 832, half at 842, just to lock in a solid win before the bell even rang. I'm in a small swing position at this point, entered towards the end of the day. Couldn't break 860 at the end of the day. It's a double top, but the bears are backpedaling a bit. After 860, resistance from extended hours is 878, and then we're looking to 900. Bulls are hoping for a gap up open tomorrow. I will be very quick to take my profit if we get one. And SPCE, climax top, just like Tesla, pulled back 25+% from the high. Volume climax, bearish reversal candlestick. And we'll be seeing, can the bulls hold 28.71? I traded SPCE today. First 5-minute oversold conditions after a massive bull run. And actually the first one was here. We dipped to 32.30, so entered on the break of 33, patiently waited for a little bit of bear follow through. I got in, filled at the 32.50s, and I exited in the 33s. I forget exactly what my exit was, but just play that little quick bounce. First 5-minute oversold conditions, and then the second time we hit oversold, we dipped way lower. And again, it's the low of the candle. That 5-minute RSI was just getting oversold on that initial pullback. And on any bounce, we'll be looking for an hourly lower high, and bears will be looking for an entry on that hourly lower high for SPCE. Hope you all had a good day out there. Those volatile names, we cover those every day in the morning live stream, in the afternoon live stream. Definitely the active day traders that we look towards. LK had a big day. So, join the community if you want to talk about them every day. Do good things. See you tomorrow.